Welcome back to Part B of Topic 11 lecture. We will continue with Learning Objective 3, identifying how the federal government regulates NFPs, particularly in terms of unrelated business income. In the past, there are owners of small businesses that have complained that NFP entities have an unfair advantage because many of them are running business-like activities but enjoying tax exemption. And because they have that unfair advantage in terms of taxes, the small business owners are not able to compete. So to inhibit unfair competitive advantage between NFPs and small businesses, NFP organizations are assessed a tax on unrelated business income. How do they define UBI, unrelated business income? It's defined as the gross income from an unrelated trade or business engaged in on a regular basis, minus directly connected expenses, certain net operating losses, and qualified charitable contributions. An example of an unrelated business income might be from a college bookstore that sells clothing. So the college will be tax exempted because it's an educational institution, but the selling of clothing is not related to the reason why they are getting tax exemption. Unless activities make an important contribution to the accomplishment of the organization's exempt purpose, then they will be considered unrelated. So the income also from an asset that is mortgage or debt financed will be considered a UBI. So, for example, the charity has bought a property and it is debt financed, but it's collecting rental income, then that would be considered as a UBI and therefore taxable. Income passed from a feeder organization to the NFP in the form of rents or interests, royalties, and annuities are also considered UBI. So you might ask, what is a feeder organization? So a feeder organization is one that is organized to carry on a trade of business for the benefit of the exempt organization. And that feeder organization remits its profits to the NFP entity. So an example could be a university might be operating veterinary clinics. So the income from the veterinary clinic might be given to the university, and so the vet clinic becomes a feeder organization. So normally the first 1,000 of unrelated business income is excluded from taxation. Unrelated trade or business activities are those that are, like I said, substantially unrelated to the carrying out of the organization's exempt purpose. So it is just fair for the charity or the NFP to be taxed for income that comes from business activities that are not related to their original purpose of being tax exempt. All right. Let's move on to the issue of excessive benefits to the officers. While an NFP's tax exempt status can be revoked for the provision of excessive benefits to its officers, it is more likely that the IRS will apply an intermediate sanction. So what are examples of excessive benefits provided to the officers? The managers, for example, might be receiving unreasonably high compensation for the service that they provide, or they could be sold an asset at bargain prices, not at fair value, or there could be some lease arrangements for which the manager of the NFP is getting quite a reasonable or substantial amount of money. So, what are intermediate sanctions? These are penalties assessed when a transaction confers a substantial benefit to a disqualified person. So, who are considered disqualified person? That means a person who is supposed to not receive substantial benefit from the NFP. So, disqualified persons are those who has a substantial influence over the organization's affairs. So, if the person is the one making decisions, who is receiving what and how much salary or compensation he or she is going to receive, then that person who has the substantial influence is supposed to be considered as disqualified person. All right. So, what are examples of intermediate sanction? Well, there are tiers to it. So, the first tier is a tax of 25% of the excess benefit on the disqualified person in addition to repayment of the excess benefit. So, if, for example, I am the CEO of the NFP and I get excessive benefit, I will be taxed 25% of that excessive benefit that I received, and I also have to repay that excessive benefit. If the organization's managers are aware of that transaction that is excessive or improper, then the NFP itself is also assessed a tax of 10% of the excess benefit. So not only is the disqualified person taxed, but also the NFP entity is taxed 10% of the excessive benefit. The second tier penalty is 200% of the excess benefit assessed on the disqualified person if the transaction is not within the taxable period. So it's very important that there is careful structuring of management compensation along with proper documentation of comparable salaries of similar positions that are critical in order to avoid these intermediate sanctions. So, if, for example, I'm the CEO and the other charitable institutions about the same size as this entity is only getting, let's just say, $100,000, let's say, per year, and I am getting $500,000, then that means there is that excessive benefit of $400,000 per year that I am getting. And I am disqualified because I'm the one making the decision how much I'm getting, whether it's $100,000 or $500,000. So the first tier is I'll have to pay a tax of 25% of the excess benefit, the $400,000 excess, all right? And then in the second tier, penalty of 200% of the excess benefit assessed on the disqualified person. So if my excess benefit is $400,000, 200% of that, that means I have to pay back $800,000. So the intermediate sanction is quite hefty. All right. Let's move on to the dissolution and reorganization. So dissolution could either be voluntary or involuntary, and reorganization may happen when there is a redefining of the mission or a merging of more than one NFP. All right. So when does that happen? If an NFP finds that the societal needs initially described in the tax exemption application are no longer met, it may redefine its mission or merge or choose to dissolve the organization. And that's what we refer to as the voluntary dissolution. The accounting issues involved in a dissolution include ensuring the, number one, all creditors are paid. Number two, all federal, state, and local taxes are paid, if any. And number three, all assets remaining after the creditors and all taxes are paid, all assets will be appropriately transferred to another tax-exempt organization. If the incorporating documents are silent about the distribution of assets, so that the incorporating documents did not stipulate how the assets will be distributed, then the state law or IRS regulations would dictate. The IRS states that if an NFP liquidates, dissolves, or terminates, its assets have to be distributed for another exempt purpose. Or, if there's no such thing available as an option, then the assets will be given to the federal or a state or local government. All right, so that's when there is voluntary dissolution or a merger or a redefinition or reorganization. What about involuntary dissolution? When would this happen? Well, involuntary dissolution may occur due to failure to file an annual report or as a result of a state attorney general's determination of fraud or unlawful conduct. All right, so involuntary dissolution is when they are asked to stop or to dissolve because they are not complying with the report requirements or when the Attorney General determined that there was fraud or any unlawful conduct. Let's now move on to learning objective 4. This is where we'll describe governance issues on NFP boards, including incorporating documents and board membership. So, when we're talking about governance in NFPs, it is kind of similar to for-profit organizations. Managers for the tax-exempt, not-for-profit organizations are directly accountable to the board of directors, which in turn are accountable ultimately to the public as well as the governmental oversight bodies. So as you can see, this relationship is not different from that of corporate managers, board of directors, and stockholders or shareholders. What's different, however, is the importance of incorporating documents that define the philanthropic or not-for-profit mission of the organization and the responsibilities of board members who may be invited to serve on the board, most likely without compensation, because they are able to raise funds, all right? So they have this fundraising ability. And many of them probably do not have much financial management expertise. All right, so let's look at the incorporating documents. First and foremost is the Articles of Incorporation. This is a document that has an external focus. It is in the Articles of Incorporation that the NFP describes the purpose of the organization, and it's not too restrictive. It's not really explaining in specific terms. On the other hand, the bylaws have an internal focus, and it describes the functional rules of the organization. So these two are important incorporating documents, and accountants are also looking at minutes of the board meetings as well as any written policies. Not-for-profit corporations can also take the form of, firstly, a membership in which there is a voting or non-voting stock. So, for example, Property Owners Association, where the members actually vote the president. So that's one form of NFP corporation. Another form of NFP corporation is what we refer to as a directorship, in which the board is self-perpetuating. So here in this category or in this form, the director is kind of selected by himself. So it elects itself. All right. So the board elects the directors. Okay. Now, why is it important to know this? Well, the significance of the form of the NFP corporations for accountants is that the stakeholders or the users of financial information and their needs may differ depending on the organizational form. Let's now focus on the board of directors. What exactly are the responsibilities of the board of directors? So the board of directors are responsible for all authorized activities generating financial support on the organization's behalf. It is the board of directors that sets policies and provides fiscal guidance as well as ongoing governance. So it's important for the not-for-profit entity to have the board of directors that contains these characteristics. All right? These are the characteristics of a quality board. What are they? It includes diversity, leadership, sensitivity to the needs of their membership or the public, the general public that they are serving. They must have some kind of direction, and that's why in the bylaws and in the minutes of the board meeting, all that direction and strategy must be stated. And they must have the ability to contribute and attract funds. So that is a very important characteristic of the board of directors. Now notice here that they also, it might not have been stated there, but when you're talking about diversity, leadership, sensitivity, direction, it actually helps if the board also have some management and financial skills that comes together as a member of the board, because the board fulfills its oversight responsibilities by working directly with the public accounting firm throughout the year. In big NFPs, there could also be a need to have audit committees. We've talked about audit committees in prior topics when we discussed auditing. And so audit committee members are actually separate from the board of directors, but the board of directors can provide the oversight as well as information that's needed by the audit committee in order for them to be able to do their job accordingly. Let's now move on to learning objective 5, the final objective for this topic. This is where we will identify how benchmarks and performance measures can be used to evaluate NFPs. Now, oversight bodies such as the Board of Directors, the not-for-profit watchdog agencies, and an increasing number of states are tracking performance measures of exempt organizations. So these are the NFPs that have tax exemption status. So which are these watchdog agencies that we're referring to? There are quite a number in the United States. So you've got GuideStar, you've got the Triple B, you can refer to Charity Watch, Urban Institute, Charity Navigator, Independent Sector, and surely there are others. In benchmarking and performance measurement, we are looking at the financial as well as operational results, and we need to compare. When we're talking about benchmarking, we need to compare it or the operation of the NFP to specified performance targets, as well as benchmarking it to comparable organizations in the industry. Now, with a sector such as the not-for-profit sector being so diverse, there is a need for a classification scheme to allow the identification of organizations that are similar enough to allow comparisons. The National Center for Charitable Statistics, NCCS, at the Urban Institute was instrumental in developing a national taxonomy of exempt entities. So this is shown in illustration 13-6, National Taxonomy of Exempt Entities Core Codes. All right. This classification system is sorted into 26 different categories related to the purpose, type, or major function of an organization. As you can see, it's arranged here from A to Z, and there are 26 letters in the alphabet, so you can see that there are 26 different categories. A has arts, culture, and humanities. B is education, C environment, and so forth and so on. And Z is unknown, not classified elsewhere. But there are quite a variety of classification. Civil rights, social action, and advocacy is one of them. And so with science and technology, social science, and so forth, then so on. So what it allows is a comparison of like with like, similar enough NFPs to compare with each other. So you'd like to compare apples with apples, not apples with oranges. And that's why this NTEE, the National Taxonomy of Exempt Entities code, is useful. Right, in terms of performance measures, there are a number of types of ratios that are available. And as you can see, some of them are familiar to us. Liquidity, we're very familiar with liquidity because it's giving us an indication of whether the organization can pay its current debts. Going concern, we've talked about going concern in the past. In going concern has indicators such as, are revenue sufficient to cover expenses? How many months of operating expenses can be covered by the unrestricted net assets? In terms of capital structure, the question that it might answer would be, does the organization rely more on debt or equity to finance its operations? So you'll notice that is quite similar to for-profit entities as well. Program effectiveness is another type of ratio that is useful. So here we are looking at the appropriateness of the amount spent in accomplishing the NFP's goals. And efficiency measures, we've talked about this last topic. This is normally shown as a ratio, like cost per service, or in this case, is the cost per achieved output decreasing over time. Leverage and debt coverage is also another one. So is the debt service expense adequately covered by income? Fundraising ratio is one of those that are specific for charitable or NFPs. So here we're looking at the percentage of contributions remaining after adjusting for the cost of raising the contributions. Fundraising efficiency answers the questions, are the costs of raising contributions an appropriately small percentage of the contributions received? Because that will indicate how efficient fundraising has been. And investment performance, is the rate of total ROI reasonable in terms of our investments? The ROI, return on investment, is that reasonable or not? The formulas for these ratios are provided in illustration 13-7. So the performance indicators are provided there. All right, let's now go to non-financial performance measures. Yes, there are certainly non-financial performance measures that are critical in addressing questions of effectiveness and efficiency. So in making decisions about providing resources to NFPs, donors, creditors, grantors, and others who review financial performance measures, they also want to know whether the organization has been effective in meeting its missions and goals. And so you can't measure that in monetary terms, in financial terms. So if, for example, the NFP is set up for educational or literacy or scientific purposes, the donors would like to know the measures in terms of education that has been provided, scientific breakthroughs and all that. They would like to know whether you are actually achieving the goal. So if a charitable organization is set up to research on how to cure cancer, for example, the donors would definitely want to know how you are progressing in terms of the mission, and that is to find cure for cancer. The Urban Institute, as well as the Center for What Works, have both collaborated to develop a common outcome indicators framework for 14 program areas. They have a sample outcome monitoring chart and indicators for 14 different program areas is available at the Urban Institute's website. I've actually looked at this website and you can see this is just a snapshot of the website, and you can see here the 14 indicators. Some are looking at adult education, family literacy, employment training is there, advocacy, affordable housing, and the like. So the program areas include, like I said, adult education, all those, all right, performing arts, youth, mentoring, just among others. You can actually see there are youth tutoring and the like. Although an NFP program will never ever be able to show that its actions were entirely responsible for the outcomes, the attempt to measure and draw correlations is in fact a valiant effort at accountability. You might have heard of the saying, what gets measured gets done. So the attempt to measure, to actually have these indicators for the 14 program areas that are included here is really a good start. Surely this will be further developed, but at least it's a good start to measure and draw correlations among these different areas of programs and accountability. All right, well, that is it for our learning objectives. You will notice that there's just so many not-for-profit entities out there. And so you might think, why are they doing it? Well, the past president of the United States, Franklin Roosevelt, said this: happiness is not in the mere possession of money. It lies in the joy of achievement, in the thrill of creative effort. You might say, does he really know what he's talking about? Well, it's not just a saying, but really there's kind of scientific evidence that our brain actually produces 4 different types of hormones. They call it happy hormones. So what are these 4 happy hormones? The first one is, have you heard of endorphins? Well, believe it or not, endorphins are released when we exercise or when we laugh. So endorphins helps the body cope with pain. That's why some people enjoy exercise, because it helps the body to cope with the pain of exercising. If you spend 30 minutes exercising every day, or read or watch funny stuff to get your day's dose of endorphins, then you will be quite alright. At least you've got one of the happy hormones covered. So what are the other 3? Well, let me tell you about the second one. The second happy hormone is called dopamine. Dopamine is released when we accomplish and get appreciated for our work. So Franklin Roosevelt knows what he's talking about. It's the joy of achievement. All right? So when we accomplish something and no one appreciated it, we might give ourselves an appreciation by, say, buying ourselves something valuable. So buying a car, buying a new house, that actually releases quite a lot of dopamine. Guess what? Dopamine is also released when someone takes sweets, sugar. And that's why there are some people who are actually resorting to eating a lot of sweets when they are unhappy. All right? There is that release of dopamine that comes together with sugar intake. But guess what? Sugar is not so good for our health anyway. So it's better to actually have that feeling of accomplishment. And sometimes the feeling of accomplishment is in itself already an appreciation. You appreciate yourself for being able to accomplish something. All right, so that's the second. What's the third? The third happy hormone is known as serotonin. So serotonin is released when we give back to others, whether it's the nature, society, or other people, anything that benefits others. So even during the lockdown, when you're providing useful information on the internet, like writing blogs, answering people's questions, this generates serotonin. All right, so giving back to the society, to the community, and anything that benefits others produces serotonin, which helps make us happy. And what's the fourth? The fourth happy hormone is known as oxytocin. Now, oxytocin is interesting. It's released when we become close to other human beings, such as when we shake hands, when we hug our friends, our family, when we put our arms on the shoulder of someone who needs help, for example, or just needs some cheering up. So this is why a child who is in bad mood needs a hug. All right. So if you want to release oxytocin, then you need to kind of be close to someone, family, friends that you care about. All right. And that's what makes us happy. And that's why a lot of people are involved in charitable organizations, NFPs, even though it lacks profit motive. Reminds me of our Bible verse at the beginning of this session. What does Mark 8 verses 36 to 37 says? For what will it profit a man if he gains the whole world and yet loses his own soul? Or what will a man give in exchange for his soul? So I will leave you with that words of wisdom, and hopefully all of us will actually experience happiness, because there is a lot more to life than just making profit or money. Giving ourselves to others for the benefit of others and accomplishing and being appreciated for it can actually help us make happy. And don't forget to exercise as well. All right, that's it for this topic. I will see you soon in our class. Bye.